Hi students, so this lecture for BBA 4th same on corporate accounting second. From the last lecture we started for the problems on the amalgamation in the nature of merger as well as amalgamation in the nature of purchase. Okay, so in last class or in the last session we discussed on one problem which is the Arpita Limited and the Anusha Limited. It is amalgamated into the Akshay Limited. Okay, so whatever the information is given, it means what this balance sheet is given of the Anushka Limited and the Arpita Limited, as well as the other information is also given. And what's with the help of this information we calculated the purchase consideration, right? We calculate the purchase consideration of the Arpita Limited. So now whatever the information is given, now we have to calculate the purchase consideration of the Anusha Limited. Okay, so now the next second one, the assets in bracket except cash of Anusha Limited were valued at 10% less than the book values and creditors are taken over at book value. Prepare the amalgamate balance sheet. Okay, so now see, it means whatever the assets are there of the Anusha Limited, they are taken by the Akshay Limited. Okay, so but what's the agreement between them? It's the assets except the assets of Anushka Limited were valued at 10% less than the book value. It means whatever the assets values are given in this balance sheet. Okay, so of the Anusha Limited, now see this machinery is rupees 1,20,000. Next stock 24,000, debtors 16,000, equipment 4,000. Okay, so like whatever they are given, so it means the except the cash. Okay, whatever the all these three assets are no, so we have to reduce the 10%. Okay, we have to reduce the 10%. Okay, so now see this, with the help of that you have to calculate. Okay, so now see, this is the computation of purchase consideration of Anusha Limited. Okay, and now see, the first of all we have to take the aggregate value of the assets. Okay, so machinery rupee is 1,20,000. Okay, so now see, this is the book values. Book value is rupees 1,20,000 less the 10% of the 10% is what's 12,000. Now see here, the 12,000 is there. So see here, machinery is 1,20,000 minus 12,000. The total amount is remaining is what's 1,08,000. Okay, so next one is what, it's a stock also 24,000. It's the book values, and 10% minus, it's a 2,400. It is a 21,600. Okay, next debtors 16,000 in the book values in the balance sheet, minus 10%, it's the 1,600. Remaining amount is the 14,400. Okay, so cash means the book values only the 4,000. Why it's the book values? In this note, what's the given, the assets except the cash. Okay, what's the avoiding, by avoiding the cash, and whatever the remaining assets, all these assets we have to take. Okay, so assets of Anushka Limited were valued at 10% less than the book values, and creditors are taken over the book values. Okay, so whatever the liabilities are there, as it is we have to take the book values. Okay, so now, so make it the total of the what's the assets. Machineries 1,08,000 plus stock 21,600 plus debtors 14,400 plus cash 4,000. Total it's what's 1,48,000. Okay, total is what's 1,48,000. Okay, so now see, from this 1,48,000 we have to minus or less liabilities taken over. Okay, and so this liabilities is what's the book values liabilities. So see here, in the balance sheet, in the equities and liabilities, so share capital, it's not the liability. Reserve and surplus, it is also not the liability. Debentures, it is the long term liability, but it's not given value in the balance sheet. So next, current liabilities, which is the trade payables, means what's the creditors, and the amount of the creditor is rupees 28,000. Okay, so this 28,000 we have to take, as we have to minus from that the assets. The assets total asset is 1,40,000 and the creditor is the 20,000. After minusing is 28,000 from the 1,48,000, remaining balance is what's 1,20,000. Okay, so Now this 1,20,000, it is the paid in equity pay purchase consideration. Okay, so now this paid in purchase consideration paid in equity shares, how to do? Okay, so you know that in the very first paragraph what's they given, the total shares. Okay, it is the authorized share capital rupees 6 lakh divided into shares of rupees 10 each. Okay, so it's what's the each share price is rupees 10. Okay, so now this convert into shares is 1,20,000. Okay, so 1,20,000 share capital is there, and the each share price is rupees 10. Okay, so this 1,20,000, these are the not the shares. Okay, keep in mind these are not the shares, this is the what the share capital. Okay, this is what's the share capital. Okay, so now we convert into the shares, so each share price is rupees 10. Okay, so it means what's the 12,000 shares are there. Okay, so purchase consideration paid in equity shares, it means how many? 12,000 into 10, it's a 1,20,000. Okay, so it's given like this only. And it's we already in the last lecture we calculated the purchase consideration for the Arpita Limited, it's 1,72,000, and this is Anushka Limited for the 1,20,000. Okay, so now in this problem what's they given, what we have to prepare the amalgamate balance sheet. Okay, and in the nature of the purchase. Okay, so now still we have to prepare what's the balance sheet. Okay, balance sheet means what's the combined balance sheet we have to prepare. Okay, which balance sheet? Combined balance sheet we have to prepare. Okay, so whatever this balance, whatever this equity and liabilities are there, so okay, the Anushka Limited and the Arpita Limited, so we have to combine that. Okay, so combine that means what? Whatever the whatever the values are there in this balance sheet, so it's not only the amalgamate. Okay, so new values we have to take. Okay, so whatever the share capital purpose, whatever the purchase consideration is there, so these values we have to take and the combine. Okay, reserve and surplus, this we have to take. Okay, so like this we will see in the next class how to prepare the consolidated balance sheet of the Arpita Limited and the Anushka Limited of the Akshay Limited. Okay, so just try to understand. Okay, so this notes is very important, you have to read the carefully these notes, you will understand. Okay, the second note is very important, the assets, they mentioned the assets, but it bracket what they mentioned, except the cash. Except the cash means what? As it is we have to take the book values. Okay, so without minusing the 10%. Okay, so this is about the other information, and I hope you will be the understand. Okay, just try to understand. If you have any doubt or any query with this session, you can contact me. Thank you.